Welcome to the Audiobook Vault. Today, our book is about the cold, hyper-aggressive architecture of elite wealth accumulation and the systematic neuroeconomic programming required to operate as a predatory financial entity in a world of absolute Darwinian market competition. The global economic matrix is deliberately engineered to maintain the vast majority of the human collective in a state of chronic operational blindness. From the early stages of institutional schooling to the highly calculated broadcasts of mainstream financial media, the masses are conditioned to accept a submissive economic narrative based on passive accumulation, multi-decade diversification, and absolute compliance with institutional guidelines. They are taught to sell their premium life equity for brittle fiat stability, invest their remnants in hyperinflated retail mutual funds, and wait patiently for 40 years, hoping that the macroeconomic cycle will reward their submissive obedience. This foundational conditioning is an intentional structural containment mechanism designed to preserve the highest-yielding asset classes and the velocity of premium capital for the elite sovereign operators who refuse the collective hypnosis. The capitalist arena is not a cooperative, democratic institution built to lift all participants equally. It is a brutal, high-velocity ecosystem of asymmetric information, where the wealth of the passive, unvetted majority is systematically liquidated and harvested by predatory macro actors who possess the cognitive radar to spot systemic arbitrage before the market can price it. To operate within this elite predatory framework, you must first execute the total psychological liquidation of the middle-class security illusion. The unvetted individual moves through the marketplace seeking an absolute guarantee of safety, looking for consensus before committing capital, and refusing to act until a financial trend has been validated by every institutional authority and retail investment newsletter. This desperate need for collective validation is a catastrophic operational error that guarantees immediate financial sterilization. The moment a financial opportunity becomes comfortable, highly publicized, and universally endorsed by the mainstream matrix, its premium alpha has been completely extracted, leaving behind nothing but a hyperinflated bubble waiting to collapse on the late retail buyers. The predatory capitalist treats public consensus with immediate clinical suspicion. You recognize that the most explosive wealth generation vectors exist exclusively within the zones of maximum uncertainty, acute institutional neglect, and collective panic. When the masses are paralyzed by structural fear, frantically liquidating their core holdings to seek the false sanctuary of cash, the predatory mind enters a state of hyper-focused scanning. You do not view a market crash as a tragic macroeconomic emergency. You view it as a massive, high-velocity reallocation event where premium, income-generating assets are forced into a state of severe pricing dislocation, allowing the sovereign operator to buy generational cash flows for pennies on the dollar. This predatory scanning requires the immediate activation of the asymmetric information radar. In the contemporary digital economy, data is universally available, but raw data is not insight. The average retail investor drowns in an ocean of superficial financial news, technical charts, and social media hype, mistakenly believing that consuming high-volume media makes them an informed market participant. This data saturation is actually a form of cognitive malware designed to generate erratic trading activity, driving high-volume transaction fees into institutional clearinghouses. The sovereign clears their internal server of all public noise and focuses exclusively on tracking structural mispricings, regulatory bottlenecks, and acute capital starvation across niche industrial sectors. You do not look at what the masses are buying, you look at the hidden friction points within corporate supply chains, the distress signals of over-leveraged corporate balance sheets, and the critical regulatory shifts that are about to create an artificial monopoly for a specific asset class. By isolating these structural variables before they leak into the public domain, you establish an absolute informational advantage that allows you to calculate the precise intrinsic value of an asset with surgical detachment, stepping into the market to capture the position while the collective remains trapped in a state of absolute cognitive ignorance. Furthermore, we must dissect the mechanics of rapid execution velocity and tactical positioning. The unvetted operator suffers from chronic decision latency, spending weeks analyzing a single investment, paralyzing their intellect through endless second-guessing and consulting multiple unvetted advisors to dilute their personal accountability. This cognitive delay is a fatal flaw in a high-velocity capital landscape where multi-million-dollar spreads disappear within minutes. The predatory capitalist operates through a system of pre-calculated execution subroutines. You do not wait for the opportunity to appear to design your strategy. You map out your financial parameters, liquidity requirements, and exit thresholds long before you step onto the battlefield. Your cash reserves are not held as passive store of value, but as highly compressed kinetic energy waiting for the precise trigger configuration to trip your sensors. The moment the market experiences a violent structural dislocation or a distressed asset falls below your pre-calculated entry price, you execute the trade with absolute non-emotional violence. You do not hesitate, you do not check the public sentiment, and you do not look for moral reassurance from the room. You strike the bid with the absolute certainty of an elite marksman, locking down the asset before the collective even realizes the pricing anomaly has occurred. By integrating this foundational predatory matrix into your financial behavior, you permanently sever your connection to the submissive economic collective. You cease to be a passive consumer of financial products, being tossed around by the volatile waves of institutional manipulation, and you transform your vessel into an elite, hyper-efficient wealth-harvesting unit. You view every economic crisis, every geopolitical disruption, and every corporate liquidation not as a threat to your stability, but as an absolute premium invitation to expand your sovereign financial empire. You do not pray for a stable, predictable market, because predictability is the absolute sterilization of elite wealth accumulation. You actively crave volatility, friction, and systemic dislocation, knowing that the higher the chaos, the greater the informational asymmetry, and the more absolute your capacity to hunt down, capture, and dominate the primary financial flows of the global matrix. To master the secondary matrix of predatory accumulation, you must learn to execute the precise exploitation of herd psychology and the tactical weaponization of collective panic within the financial arena. The unvetted collective behaves as a single, primitive biological organism that is highly porous to emotional contagion. When a macroeconomic shockwave ripples through the financial ecosystem, whether it is a sudden spike in central bank interest rates, a localized banking default, or a highly dramatized geopolitical confrontation, the herd experiences an immediate, synchronized surge of systemic cortisol. Paralyzed by the raw fear of capital destruction, they abandon all rational valuation models, override their long-term strategic plans, and frantically dump their highest-quality, cash-generating assets onto the open market at steep discounts just to find temporary psychological relief from the anxiety of the moment. The predatory capitalist analyzes this collective liquidation with the cold, unblinking detachment of a clinical auditor. You recognize that the herd's panic is the single most powerful wealth-generating mechanism in human history. You do not step into the market to calm the panic or console the bleeding majority. You step into the space as a liquidity provider of last resort, systematically vacuuming up their premium equity, real estate holdings, and corporate bonds while they are trapped in a state of absolute psychological submission. This strategic harvesting requires the clinical implementation of the Contrarian Arbitrage Protocol. The amateur investor enters the marketplace searching for a comfortable trend, waiting for the majority of market participants to tell them that an asset class is safe to purchase. This need for social safety ensures that they will always buy at the absolute peak of the market cycle, when prices are inflated by the collective greed of the crowd. The predatory capitalist operates in direct, calculated opposition to the herd's movement. When the market is hyperinflated and retail actors are borrowing capital to purchase speculative assets under the influence of extreme fear of missing out dopamine loops, you quietly liquidate your overvalued positions, compress your assets into high-velocity cash reserves, and wait in absolute stillness. When the inevitable crash arrives and the exact same retail actors are crying in the public square, you step out of the shadows. You buy when the blood is actively flowing in the streets, looking through the emotional static of the news cycle to target businesses with fortress balance sheets, unhackable intellectual property, and essential consumer monopolies that have been artificially dragged down by the tide of collective panic. By stepping onto the battlefield when everyone else is running for the exit, you lock in an unshakable cost basis that guarantees generational alpha the exact moment the macroeconomic cycle inevitably corrects. Furthermore, we must dissect the supreme law of value to price dislocation tracking. The fragile retail mind is deeply addicted to watching the daily fluctuations of stock tickers and public price charts, mistakenly believing that the volatile price of an asset is a direct reflection of its actual underlying worth. This confusion between price and value is a catastrophic cognitive flaw that allows large institutional predators to manipulate public sentiment and shake out retail hands. The predatory capitalist maintains an impenetrable intellectual firewall between external market pricing and intrinsic economic value. You calculate the true value of an enterprise based on its raw, cold fundamentals, its free cash flow yield, its capital efficiency, its liquidation value, and the defensive strength of its structural moat. When the market price drops 50% below your clinical calculation due to macro conditions that have zero impact on the company's long-term earning power, you do not panic. You rejoice. You understand that a lower price is not an administrative failure of the asset, but an explicit premium discount offered by a manic depressive market that is begging you to take control of its inventory. You execute your buy orders with absolute mechanical stillness, ignoring the downward momentum of the chart and anchoring your position until the market recovers its senses and reprices the asset to match its real economic gravity. This financial insulation prepares you for the clinical execution of the distressed asset acquisition matrix. In times of severe economic tightening and credit contraction, over-leveraged corporate entities and real estate developers find themselves facing sudden, acute liquidity emergencies. They have massive debt maturities coming due, their revenues are temporarily compressed by the recession, and traditional banking institutions are too terrified to extend them fresh capital. This is the precise environment where the predatory capitalist mind thrives at its highest operational capacity. You do not approach these distressed operators with sympathy. You approach them with the hard, uncompromising terms of an economic sovereign. You offer them the vital rescue liquidity they desperately need to survive the quarter, but you extract a steep, permanent tribute in return. You demand senior secured debt positioning, massive equity warrants, and absolute structural oversight over their corporate governance. If they refuse, you calmly step back and allow their network to slide into involuntary bankruptcy before stepping back to the table to purchase their entire operational infrastructure out of the receivership court for a fraction of its replacement cost, expanding your financial empire through the systematic liquidation of your over-leveraged competition. By integrating these advanced contrarian protocols within the second layer of your wealth harvesting matrix, you have successfully transformed your mind into an elite macroeconomic filter. You have taken the raw, volatile emotions of human greed and fear, forces that permanently enslave and bankrupt the masses, and you have masterfully refined them into a pristine, predictive instrument that senses systemic mispricings before the collective can react. You do not step into the global marketplace hoping for a smooth, peaceful economic landscape. You step into the arena actively praying for volatility, credit crunches, and institutional liquidations, because you know that these are the exact moments when the wealth of the unvetted majority is unlocked and delivered directly to the sovereign alchemist who has the courage, the capital, and the clinical focus to seize it without mercy. The old software of retail hesitation and economic dependency has been completely wiped from your system, leaving you standing at the absolute apex of the financial landscape as a dominant master of capital reallocation. To advance into the third layer of predatory accumulation, you must transition from the exploitation of herd panic to the clinical mastery of algorithmic structural gaps and the tactical positioning inside hidden niches before institutional capital can deploy its weight. The average retail investor or middle-class business owner believes that the global financial market is a perfectly efficient machine, where all available data is instantly priced into an asset class, leaving zero room for outsized wealth generation. They look at the massive, high-frequency trading servers of Wall Street, the quantitative hedge funds, and the multi-billion-dollar sovereign wealth funds, and they fall into a state of immediate defeatist paralysis, assuming that every single profitable spread has already been discovered by artificial intelligence. This assumption is a profound operational delusion that protects elite capital networks. While institutional megafunds are highly optimized for moving billions of dollars through liquid macroeconomic sectors like blue-chip stocks and major currencies, their immense scale makes it structurally impossible for them to enter low-volume, highly complex niche ecosystems without violently moving the price against themselves. The predatory capitalist operates inside these precise institutional blind spots, scanning the economic underworld for asymmetric opportunities that are too small for a hedge fund to notice, yet large enough to manufacture absolute financial sovereignty for an independent predator. This niche hunting requires the systematic activation of the regulatory and structural friction protocol. Institutional capital is inherently bureaucratic, cowardly, and bound by rigid compliance mandates that forbid it from entering environments that lack standardized legal frameworks or clear historical precedents. When a structural shift occurs within a local economy, such as a sudden change in maritime zoning laws, an unexpected tax restructuring for a specific manufacturing subsector, or a highly technical patent bottleneck, the institutional servers enter a prolonged state of administrative latency as their legal committees debate the risks. The predatory capitalist treats this administrative latency as an absolute high-velocity operational window. You do not wait for the legal frameworks to become perfectly clear or comfortable. You dive directly into the center of the regulatory friction, using your sharp intellect to decipher the real-world economic consequences of the new law long before the retail market or the corporate boards can adjust. You purchase the affected real estate parcels, buy out the distressed family-owned businesses that are terrified of the compliance costs, or lock up the exclusive distribution rights for the critical technology. By the time the institutional funds finally update their compliance parameters and enter the space looking to acquire these assets at scale, you are already sitting at the gate as the primary monopoly holder, forcing them to purchase your inventory at massive premium multiples that instantly cement your financial supremacy. Furthermore, we must dissect the supreme law of asymmetric debt and distressed corporate debt tracking. In the shadows of the secondary financial markets lies a massive, highly illiquid arena where traditional commercial banks quietly sell off their non-performing loans, defaulted commercial mortgages, and broken corporate credit lines at deep structural discounts just to clean up their public balance sheets ahead of quarterly regulatory audits. The unvetted collective views a defaulted loan as a toxic radioactive waste site to be avoided at all costs. The predatory capitalist views a distressed debt instrument as the ultimate tactical Trojan horse to seize absolute ownership of high-value physical infrastructure. You do not purchase these debts to collect the interest payments from the bankrupt debtor. You purchase the senior secured debt note with the explicit clinical intent to execute a debt-to-equity foreclosure loop. You target a business, such as an elite medical facility, a prime logistics warehouse, or a highly profitable specialized manufacturing plant that is fundamentally sound but has been temporarily choked by an incompetent management team that mismanaged its short-term debt structures. You buy the banknote for 40% of its face value, step into the shoes of the primary lender, and the moment the technical default occurs, you aggressively launch foreclosure proceedings, wiping out the equity holders and seizing absolute debt-free ownership of a premium physical enterprise for a fraction of its replacement value. This operational velocity prepares you for the clinical execution of the hyper-local supply chain squeeze. Every major industrial sector, from green energy infrastructure to specialized microchip logistics, is built upon a highly complex, fragile web of hyper-localized suppliers, custom component manufacturers, and single-source raw material processors. When a macroeconomic disruption or a localized credit freeze hits one of these obscure tiers, a critical supplier can find itself facing immediate bankruptcy over a minor cash flow deficit of a few $100,000. The major multinational corporations at the top of the supply chain frequently remain completely oblivious to this micro-collapse until their entire multi-billion-dollar assembly line grinds to a catastrophic halt due to the missing component. The predatory capitalist maps these hidden industrial dependencies with the cold precision of a military strategist. You monitor the financial health of these single-source gatekeepers, and the moment they experience a liquidity shock, you step in with immediate, non-negotiable rescue capital. You do not simply lend them money, you acquire an absolute controlling equity position in their corporate shell. By securing control of a microscopic bottleneck that a multi-billion-dollar enterprise absolutely requires to function, you have effectively taken the entire multinational corporation hostage, forcing them to renegotiate their long-term supply contracts on your terms and funneling their corporate treasury directly into your personal asset vault. By mastering these advanced structural arbitrage protocols within the third layer of your predatory capital blueprint, you have permanently left behind the shallow, overcrowded retail markets, where the masses waste their energy fighting for microscopic percentage gains. You have transformed your conscious mind into an elite, high-altitude optical array that sees through the corporate noise, scans the structural underbelly of the global economy, and identifies the exact architectural fault lines where immense wealth is waiting to be liberated. You do not look for easy, comfortable investments that receive public applause. You actively hunt for the complex, the overlooked, the illiquid, and the highly protected niches where your superior cognitive velocity and clinical fearlessness grant you an absolute, unassailable monopoly over the primary capital conduits of the world matrix. To advance into the fourth layer of predatory accumulation, you must master the clinical architecture of structural liquidity optimization and the aggressive insulation of your harvested capital from institutional erosion. The unvetted individual operates under the naive delusion that wealth accumulation is finished the moment a high-yield transaction is executed or an asset is sold for a massive fiat profit. They celebrate their paper gains in public, leaving their capital sitting completely exposed within traditional commercial banking structures, entirely vulnerable to the silent predatory extraction mechanisms of hyperinflation, sudden currency devaluations, and aggressive fiscal taxation. This operational negligence allows the institutional matrix to quietly siphon off their premium alpha, forcing the retail operator right back onto the treadmill of economic dependency. The predatory capitalist treats the preservation and velocity of capital with the exact same hyper-focused aggression used to hunt down the initial opportunity. You do not view capital as a passive token of personal consumption or social status. You view it as high-voltage financial ammunition that must be instantly routed through an elite network of offshore legal holding structures, asset-backed sovereign vaults, and non-taxable corporate entities designed to ensure your absolute financial sovereignty. This aggressive insulation requires the systematic execution of the permanent liquid defensive perimeter. In a highly volatile macroeconomic landscape where banking institutions routinely face systemic insolvency risks and central authorities implement arbitrary capital controls, leaving your primary liquidity pool inside a single jurisdiction is an act of strategic suicide. The sovereign maps out a decentralized, multi-jurisdictional banking layout long before the first signs of market distress appear on the horizon. You establish operational outposts in premium, low-regulation financial sanctuaries across the globe, utilizing private trust structures and specialized corporate shells that legally separate your personal identity from your physical capital. You do not store your wealth in eroding fiat currencies that are continuously debased by central bank printing presses. You convert your liquid reserves into hard, high-density, real-world assets, such as physical bullion stored outside the traditional banking grid, premium short-term sovereign debt instruments, and high-yield private placement credit lines. By keeping your capital completely decoupled from the fragile retail banking system, you ensure that your assets remain completely bulletproof during an institutional banking panic, leaving you fully liquid and prepared to execute high-stakes distressed buyouts while your competition is completely frozen by the matrix. Furthermore, we must dissect the supreme law of tax optimization and structural corporate engineering. The fragile collective mind views taxation as an unavoidable, natural law of human society, submissively handing over 30 to 50% of their annual wealth generation to state treasuries without checking the underlying legal statutes. The predatory capitalist approaches fiscal code with the precise mathematical scalpel of an elite corporate defense attorney. You recognize that tax laws are not designed to punish wealth creators. They are deliberately written with embedded strategic escape hatches, depreciation loops, and corporate credits engineered specifically to incentivize elite sovereign actors to deploy capital into high-priority economic sectors like specialized industrial real estate, private energy infrastructure, and maritime logistics. You do not attempt to evade fiscal obligations through low-level illegal non-disclosure. You aggressively restructure your financial architecture to fully exploit these institutional loopholes. You ensure that your personal vessel owns absolutely nothing in its own name, while your private holding companies control everything. Your corporate entities absorb all your operational lifestyles, research parameters, and technological expenses before a single dollar of net income is calculated, legally reducing your tax liabilities to an absolute minimum and compounding your premium alpha at a velocity that leaves the retail majority permanently left behind. This structural insulation prepares you for the clinical execution of the automated cash flow scaling matrix. True financial predation is never sustained by executing one-off speculative flips that trigger massive short-term capital gains taxes and force you to continuously hunt for the next transaction just to keep your baseline stable. The sovereign transitions their portfolio away from speculative capital gains toward the absolute dominance of recurring, unhackable cash flow engines. You reinvest your initial arbitrage profits exclusively into high-moat, essential businesses and real estate assets that possess absolute pricing power. Enterprises that can aggressively raise their prices ahead of inflation without experiencing a drop in customer demand. You target specialized medical storage facilities, cellular transmission towers, triple net industrial warehouses, and critical digital infrastructure monopolies. Once these assets are acquired under distressed conditions, you automate their operational management through elite third-party operators, transforming them into self-regulating capital printing presses that flood your private accounts with continuous streams of liquid dividend distributions every single month. This automated cash flow matrix forms an unshakable financial fortress that frees your conscious mind from the daily anxiety of survival, allowing you to focus your premium cognitive energy on scanning the macroeconomic landscape for the next systemic dislocation. By integrating these advanced capital insulation protocols within the fourth layer of your predatory blueprint, you have achieved a state of absolute structural invulnerability within the marketplace. You are no longer merely a highly skilled financial hunter who operates at the mercy of institutional regulations and fiscal traps. You have become a self-contained, sovereign economic empire that operates completely above the frequency of the retail collective. You have engineered an elite capital routing system that seamlessly captures raw opportunity in the shadows, converts it into high-yielding cash flow engines, and insulates the resulting wealth from every form of institutional erosion. The old software of retail financial vulnerability and submissive fiscal compliance has been completely purged from your operating system, leaving you standing at the absolute center of your reality as an unhackable apex master of capital accumulation and sovereign preservation. To advance into the fifth layer of predatory accumulation, you must transition your focus from structural insulation to the cold mechanics of high-stakes financial negotiation and the tactical imposition of predatory terms upon your counterparties. The average business operator enters a transaction suite under the profound psychological delusion that negotiation is a cooperative, diplomatic exercise designed to forge a mutually beneficial compromise where both sides leave the room equally satisfied. They smile warmly, reveal their core financial parameters too early, and actively look for superficial consensus to avoid the uncomfortable tension of open confrontation. Professional friction. This submissive behavioral posture is an immediate operational failure that invites total strategic exploitation. The global marketplace is an aggressive arena where every dollar left on the table is instantly converted into ammunition for your competition to use against your network. The predatory capitalist treats the negotiation table with the clinical detachment of a military commander executing a siege. You do not enter the room to make friends, earn social validation, or establish an egalitarian partnership. You step across the threshold with a single, unyielding strategic objective to extract the absolute maximum economic leverage from the counterparty, lock down their premium assets under highly restrictive covenants, and establish an unassailable master frame that dictates the long-term cash flow distribution of the venture. This tactical domination requires the immediate implementation of the systemic data isolation and manufactured informational asymmetry protocol. The unvetted individual loves to hear themselves talk, frantically over-explaining their business model and throwing out financial projections in a desperate attempt to impress the other side and justify their worth. The sovereign operates through the law of absolute verbal compression and tactical silence. You enter the negotiation room possessing a flawless, microscopic map of the counterparty's structural vulnerabilities, their impending debt maturities, their internal partner disputes, and their acute liquidity deficits, while keeping your own financial capabilities and ultimate intent perfectly hidden behind an impenetrable firewall of clinical indifference. When the discussion begins, you do not deliver long, defensive presentations. You ask short, low-velocity, and highly diagnostic questions designed to force the counterparty to over-explain their position, justify their numbers, and lay bare their operational fears. You allow long, freezing pauses of 5 to 7 seconds to settle over the table after they deliver an answer, refusing to break the silence to ease their psychological discomfort. Under the heavy gravity of your non-reactivity, their nervous system will instinctively interpret the silence as an absolute rejection of their terms, driving them to experience immediate internal anxiety, lower their financial demands, and volunteer unforced concessions before you have even made your primary offer. Furthermore, we must dissect the supreme law of the aggressive anchor and the weaponization of the extreme initial bid. The fragile middle-class mind is terrified of offending the counterparty, wasting weeks trading polite micro-adjustments that keep the transaction pinned directly within the market's efficient pricing zone, completely destroying their capacity to extract outsized alpha. The predatory capitalist understands that the human brain possesses an unhackable cognitive bias known as anchoring. Whoever throws the first hard number onto the table permanently commands the psychological coordinates of the entire interaction. You do not offer a fair or reasonable initial bid. You deliver an extreme, deeply discounted yet highly calculated offer that borders on absolute professional insolence. When you drop this number onto the table, you do not deliver a high-pitched defense or offer an immediate apology. You state the price with a flat, downward-inflected cadence and lock your eyes onto their facial matrix with absolute, unblinking stillness. The counterparty's limbic system will instantly experience a massive cognitive shockwave, completely shattering their pre-rehearsed negotiation scripts and forcing their internal servers to discard their optimistic valuations. They are instantly dragged into a submissive, defensive posture, wasting their premium energy trying to pull you back to the centerline and unconsciously treating a slightly less predatory counteroffer as a massive psychological victory. This behavioral mastery prepares you for the clinical execution of the restrictive covenant cage and equity capture matrix. When you deploy your liquid rescue capital or step in to purchase a distressed business, you never allow the existing management team or founders to retain unmonitored operational autonomy over the corporate shell. You build an intricate, legally fortified cage of restrictive covenants around their balance sheet that systematically strips them of their strategic leverage. You demand absolute veto power over all future debt issuance, complete oversight over executive compensation, and supermajority liquidation preferences that guarantee your capital is paid out 3 to 5 times over before the common equity holders receive a single cent. You embed strict operational benchmarks into the contract. The exact millisecond the management team misses a quarterly revenue target or slips below a specific liquidity ratio, a pre-calculated technical default clause is instantly tripped. This clause automatically dilutes their remaining ownership stakes to absolute zero, transfers all outstanding voting shares directly into your private holding company, and grants you total, unhackable, and debt-free control of the entire enterprise, allowing you to harvest the physical infrastructure while the unvetted founders are permanently wiped off the capitalization table. By integrating these advanced negotiation subroutines within the 5th layer of your predatory capital architecture, you have elevated your operation from a simple transaction participant to an elite legislative force within the marketplace. You do not sit at the table hoping for a gentle compromise or a friendly handshake. You actively welcome intense professional tension, high-stakes ultimatums, and hostile corporate standoffs because you know that these are the precise environments where your superior biochemical containment and clinical strategic execution allow you to completely flatten the psychological filters of your counterparties. The old software of social politeness, negotiation hesitation, and submissive value sharing has been completely eradicated from your mainframe, leaving you standing at the absolute apex of the boardroom landscape as a sovereign master of contractual architecture, predatory capital allocation, and unyielding wealth extraction. To advance into the sixth layer of predatory accumulation, you must transition your focus from individual negotiation dominance to the systematic dissolution of market competition and the aggressive monopolization of your localized financial grid. The average business operator exists in a state of naive, romantic delusion regarding the nature of the free market, believing that the economic landscape is a peaceful, cooperative theater where multiple small enterprises can happily coexist, share market share, and grow at an egalitarian pace. They avoid direct confrontation, maintain polite relations with their rivals, and refuse to implement aggressive pricing or supply chain interventions because they fear public friction and social disapproval. This submissive, defensive posture is an immediate operational failure that ensures long-term financial sterilization. The global capitalist arena is a brutal zero-sum ecosystem where your competitor's market share is not a neutral variable. It is a direct restriction on your network's velocity and long-term capital compounding power. The predatory capitalist analyzes the competitive landscape through the lens of absolute strategic subtraction. You do not enter an industrial sector to participate. You enter to flatten the existing infrastructure, choke the cash flow of your rivals, and build an unassailable vertical monopoly that forces the entire consumer base to adapt permanently to your pricing frequency. This competitive dissolution requires the immediate execution of the systematic vulnerability mapping protocol. Every established competitor within your geographic or digital perimeter, no matter how formidable their corporate facade appears, possesses severe hidden structural vulnerabilities within their balance sheet, operational pipeline, or customer retention matrix. They are frequently weighted down with expensive legacy debt structures, dependent on fragile single-source supply lines, or running on inefficient, bloated administrative payrolls that destroy their free cash flow margins. The sovereign does not launch a blind, high-energy frontal assault against these rivals. You map their internal dependencies with the microscopic detachment of a data scientist. You track their debt maturity schedules, audit their customer satisfaction gaps, and monitor their employee turnover metrics. The exact millisecond a macroeconomic tightening cycle or an industry-wide supply shock occurs, you launch a coordinated, high-velocity offensive designed to expose their structural fault lines. You lower your pricing to near zero margins across their primary product lines, subsidizing your temporary losses through your insulated liquid reserves and forcing their over-leveraged network to hemorrhage cash until their banking institutions withdraw their credit lines, driving them into a state of total involuntary operational collapse. Furthermore, we must dissect the supreme law of vertical integration and supply chain entrapment. The fragile retail mind believes that to expand a business, you simply spend more capital on public marketing and customer acquisition campaigns. To boost short-term sales metrics, this superficial hyperactivity is a massive strategic error that leaves your enterprise completely vulnerable to external inflation and supplier manipulation. The predatory capitalist builds an unhackable economic fortress through the architecture of total vertical integration. You do not simply own the retail storefront or the digital distribution platform. You use your accumulated capital to systematically acquire the underlying logistics networks, the custom component manufacturing facilities, and the raw material processing plants that your entire industry requires to survive. By taking direct control of the fundamental building blocks of the supply chain, you establish an absolute chokehold over your competition. You can arbitrarily raise the raw material costs for your rivals while lowering them for your own entities, creating an artificial margin compression that systematically starves their networks of vital operational oxygen and leaves them with no choice but to surrender their market share or liquidate their corporate assets directly into your private holding companies. This market monopolization prepares you for the clinical execution of the predatory talent and proprietary asset harvest, when an aggressive competitor is entering the final stages of financial suffocation due to your deliberate pricing interventions and supply chain squeezes. Their internal human infrastructure will naturally descend into a state of panic and severe organizational friction. Their elite software developers, master logistics coordinators, and high-performance sales directors will instinctively realize that their corporate vessel is sinking, making them highly porous to external recruitment and strategic defection. The sovereign steps into this chaotic environment not with public sympathy, but with an aggressive talent extraction matrix. You approach their key intellectual assets privately, offering them premium compensation packages, unhackable operational autonomy, and long-term equity structures that their distressed employers can no longer afford. By stripping your dying rivals of their primary intellectual capital and proprietary technological systems, you permanently accelerate your own processing speed, while ensuring that their remaining network is completely castrated of the operational capability required to launch a counteroffensive, leaving their corporate shell completely hollowed out and ready for absolute market liquidation. By integrating these advanced competitive dissolution subroutines within the sixth layer of your wealth harvesting matrix, you have elevated your financial entity to an unassailable position of regional dominance. You no longer walk through the marketplace hoping for fair play or polite regulatory boundaries. You actively step into the arena as a dominant economic sovereign who designs the underlying gravity of the room. You view the presence of competition not as an immutable fact of the market, but as a temporary structural inefficiency that must be systematically audited, starved, and absorbed into your grand vertical empire. The old software of retail politeness, competitive hesitation, and passive market share sharing has been permanently purged from your internal networks, leaving you standing at the absolute apex of the industrial landscape as an unhackable apex master of market monopolization and sovereign wealth consolidation. To advance into the seventh layer of predatory accumulation, you must transition your focus from physical and corporate assets to the mastery of digital financial architecture and the tactical exploitation of algorithmic structural gaps within the modern hyper-connected marketplace. The average retail investor or corporate manager operates under a profound state of functional hypnosis regarding digital finance, viewing the rise of artificial intelligence, high-frequency trading algorithms, and decentralized networks as an impenetrable technological barrier that strips the independent operator of all strategic agency. They sit before their commercial screens, passively consuming delayed retail charts and submissively reacting to artificial price triggers that have been deliberately engineered by institutional market makers to trap their capital and harvest their liquidity. This defensive, reactive posture is an immediate operational failure that ensures permanent economic subjugation. The predatory capitalist completely rejects the digital illusion. You recognize that every technological system designed by human engineers, no matter how advanced its predictive algorithms or deep learning servers appear, possesses deep structural blind spots, latency delays, and systematic biases born from its own rigid programming constraints. You do not attempt to compete with the machines on their own terms of absolute transaction velocity. You scan their automated behavioral loops from a high-altitude strategic posture, identifying the exact architectural friction points where institutional algorithms experience systemic data overloads, allowing you to execute high-value interventions that harvest immense capital before the network can correct its trajectory. This algorithmic exploitation requires the immediate implementation of the informational asymmetry and sentiment inversion protocol. institutional trading algorithms are deeply optimized to scan global digital media, social networks, and corporate press releases at high speeds, executing massive buy or sell orders based on automated semantic keywords and sudden spikes in public sentiment. This reliance on collective sentiment makes the automated system highly vulnerable to acute manipulation and artificial feedback loops. When a highly public, non-systemic digital panic or a sensationalized regulatory rumor ripples through the internet, the institutional servers enter an automated, cascading liquidation cycle, dumping premium technology stocks, digital real estate assets, and strategic commodities onto the market at severe pricing dislocations simply because their risk management software enforces mandatory stop-loss orders. The sovereign analyzes this automated panic with absolute cold detachment. You do not read the sensationalized news headlines to understand the market. You read the institutional liquidations to track the exact points where the algorithm has dropped the price of a cash-generating asset below its liquidation value. You step into the digital vacuum with pre-calculated, non-emotional bid orders, vacuuming up their premium digital infrastructure and proprietary intellectual assets at steep structural discounts while the machines are trapped in their self-destructive liquidation loops. Furthermore, we must dissect the supreme law of independent liquidity provision within decentralized financial networks. The fragile middle-class mind is deeply dependent on traditional, centralized financial clearings and commercial banking portals to process their transactions, submissively paying heavy administrative fees and accepting arbitrary capital controls that freeze their assets during times of geopolitical or macroeconomic distress. The predatory capitalist builds an unhackable economic fortress by mastering the mechanics of independent liquidity routing and sovereign asset tokenization. You operate within specialized, decentralized capital pools where automated smart contracts dictate the distribution of wealth without human or institutional intervention. Instead of hiding your capital in eroding fiat bank accounts that run the continuous risk of institutional insolvency, you deploy your liquid reserves directly into high-yield automated market makers, supply chain financing smart contracts, and tokenized private debt instruments that possess absolute pricing power. You become the hidden infrastructure provider that the rest of the market requires to execute their digital transfers, extracting a continuous, unhackable, and automated micro-tribute from every transaction that passes through your digital networks, compounding your wealth at a compounding velocity that completely bypasses the traditional taxation and commercial banking grid. This digital sovereignty prepares you for the clinical execution of the proprietary asset insulation and platform monopoly harvest. In the contemporary economic wilderness, the traditional boundaries of business have been permanently redrawn. The most valuable commodities are no longer just physical real estate or heavy machinery, but the underlying digital platforms, proprietary customer databases, and automated software workflows that dictate the distribution of consumer attention. The sovereign uses their accumulated capital to systematically target and acquire niche digital monopolies that have been temporarily starved of operational funding due to the incompetence of their unvetted founders. You look for automated software platforms that possess highly addictive consumer retention loops, low operational overhead, and unhackable proprietary code, but are suffering from a temporary short-term cash crunch. You step in with non-negotiable, heavy capital injections, stripping the original developers of their strategic equity and taking absolute control of the digital architecture. You then optimize the platform's monetizing algorithms, automate its administrative structures through artificial intelligence modules, and insulate the resulting cash flow through offshore corporate structures. Entities. You have successfully engineered a self-sustaining digital printing press that harvests premium global alpha 24 hours a day, keeping your mind fully liberated from the daily noise of survival and perfectly positioned to hunt the next systemic dislocation in the global matrix. By integrating these advanced digital insulation protocols within the seventh layer of your predatory capital blueprint, you have achieved a state of absolute structural independence within the global landscape. You're no longer merely a participant in the physical marketplace, subject to regional fluctuations of local economies and institutional gatekeepers. You have transformed your financial enterprise into a decentralized, borderless economic empire that operates completely above the frequency of the retail collective. You have engineered an elite digital routing apparatus that seamlessly scans the global network, captures raw arbitrage opportunities in the shadows, and insulates the resulting capital from every form of institutional erosion. The old software of retail digital vulnerability and submissive reliance on traditional commercial systems has been permanently purged from your operating system, leaving you standing at the absolute center of your reality as an unlit, unhackable apex master of the digital capital matrix. To advance into the eighth layer of predatory accumulation, you must transition your focus from digital environments to the strategic exploitation of global macroeconomic crises, central bank credit tightening, and the structural collapse of sovereign debt instruments within the international financial theater. The unvetted collective moves through the economic landscape holding a childish, sentimental faith in the permanence of national currencies, government bonds, and institutional pension systems, submissively believing that state authorities will always intervene to protect their personal savings and shield their domestic economy from catastrophic inflation. When a systemic macroeconomic breakdown occurs, whether it is a sudden sovereign debt default in an emerging manufacturing hub, a massive currency devaluation enforced by global monetary funds, or a severe stagflationary spiral that destroys the purchasing power of the middle class, the herd falls into a state of immediate, paralyzing despair. They witness their lifetime savings evaporate within a matter of months, and their frantic response is to beg the state for artificial subsidies, corporate bailouts, or price controls that only accelerate the underlying economic decay. The predatory capitalist analyzes macroeconomic destabilization with the cold, unblinking eye of a global asset strategist. You recognize that national governments and central banks are fundamentally over-leveraged entities running on unsustainable monetary deficits, and their inevitable debt liquidations are not historical tragedies. They are the most massive, high-velocity reallocation events on the planet, actively designed to strip the passive collective of their remaining wealth and deliver it directly to the sovereign operators who hold their capital outside the inflationary grid. This macroeconomic predation requires the immediate implementation of the inflation arbitrage and debt debasement protocol, while the unvetted majority attempts to survive inflation by cutting their personal consumption or placing their depreciating fiat cash into low-yield commercial savings accounts. The predatory capitalist uses the mechanics of monetary debasement to violently multiply their wealth. You do not store your core capital in currencies that are actively being printed into oblivion by desperate political institutions. You execute a massive strategic pivot into high-utility, finite physical assets that possess intrinsic, unlit economic gravity. You target deep-water maritime shipping ports, specialized agricultural production processing plants, private energy transmission grids, and high-density industrial real estate nodes located within critical international trade corridors. These hard assets do not derive their value from institutional decrees or paper fiat ratings. They derive their value from absolute physical scarcity and global economic utility. When the central authorities print trillions of currency tokens to service their sovereign debt liabilities, the nominal price of your hard assets experiences an automatic compounding explosion, forcing the inflation-strangled public to pay massive adjusted premiums to utilize your infrastructure, effectively converting the collective's monetary destruction into the precise fuel that drives your sovereign wealth accumulation. Furthermore, we must dissect the supreme law of asymmetric leverage exploitation during a systemic credit contraction. When a central bank aggressively raises borrowing costs and contracts the global money supply to fight hyperinflationary pressures, the traditional commercial credit markets enter a state of severe immediate paralysis. Real estate developers who built their entire portfolio on cheap short-term debt suddenly find themselves completely unable to refinance their multi-million-dollar mortgages, and highly profitable corporate enterprises are stripped of their traditional banking lines of credit overnight. This widespread capital starvation forces over-leveraged market actors into a state of absolute submissive vulnerability, forcing them to liquidate their crown jewel assets at deep structural discounts just to meet their immediate interest obligations to their senior lenders. The predatory capitalist steps into this credit vacuum, acting as a high-yield private credit originator. You do not lend money under the soft, cooperative terms of a traditional retail bank. You structure your capital injections using the hard, uncompromising architecture of senior secured mezzanine financing. You demand absolute first priority lines over their entire physical asset base, insert predatory equity kicker clauses that grant you massive ownership percentages for zero cost, and enforce extreme interest rate premiums that reflect the absolute desperation of the borrower. If their network recovers, your private capital pool extracts an unprecedented financial yield. If they default, you instantly activate your legal foreclosure subroutines, seizing absolute debt-free ownership of their entire physical corporate infrastructure for a fraction of its true replacement cost. This structural command prepares you for the clinical execution of global geographic arbitrage and jurisdictional navigation. The fragile retail mind is deeply provincial, restricting their financial investments and corporate structures exclusively to the country where they were physically born, submissively accepting whatever arbitrary tax increases, aggressive regulatory asset freezes, or domestic currency devaluations their local government chooses to enforce against their perimeter. The predatory capitalist operates as a borderless, multi-jurisdictional economic sovereign who views the entire globe as a fluid collection of competitive legal frameworks. You do not anchor your lifestyle or your wealth to a single geographic territory. You systematically distribute your operational entities across multiple specialized jurisdictions that are actively competing for elite capital deployment. You route your corporate revenues through tax-free maritime logistics zones, store your physical gold reserves in independent sovereign alpine vaults, and secure alternative citizenship and residency portfolios that grant your physical vessel absolute mobility across the international landscape. When a specific nation-state enters a cycle of political instability or aggressive fiscal extraction, you do not stay to fight or justify your position. You calmly execute a digital and physical asset migration, moving your premium capital channels out of the hostile perimeter within milliseconds, leaving the predatory state to harvest nothing but the empty shells of the submissive collective, while your global financial empire continues to compound its sovereignty in absolute safety and freedom. By mastering these advanced macroeconomic arbitrage protocols within the 8th layer of your predatory capital architecture, you have permanently broken free from the geopolitical traps that enslave and bankrupt the provincial masses. You have transformed your conscious mind into an elite, high-altitude macroeconomic filter that views global currency shocks, sovereign debt defaults, and credit contractions not as terrifying systemic threats, but as predictable, highly calculated invitations to execute absolute asset accumulation. The old software of national currency dependency, blind institutional trust, and provincial economic confinement has been completely liquidated from your operating system, leaving you standing at the absolute center of your global reality as an unhackable, apex master of macroeconomic sovereignty and hard asset consolidation. To advance into the ninth and ultimate layer of predatory accumulation, you must transition your focus from individual macroeconomic plays to the permanent synthesis of your financial empire and the institutionalization of your sovereign mindset across the multi-generational horizon. True financial sovereignty is never a temporary, short-term performance validated exclusively by catching a single market trend or executing a one-off corporate liquidation. The global economy is a highly dynamic, volatile ocean that will ruthlessly crush any operator who falls into a state of premature celebration, intellectual laziness, or strategic complacency following their initial financial victories. The average individual matches their wealth expansion with an immediate submissive escalation in their personal consumption, purchasing hyper-depreciating luxury liabilities and broadcasting their newly found status to the social matrix to seek validation from the collective. This operational negligence is a profound behavioral trap that quickly drains their liquid reserves, re-exposes their perimeter to institutional taxation, and drags them right back into a state of functional financial vulnerability. The predatory capitalist treats initial wealth accumulation as nothing more than raw, cold foundation stone. You do not celebrate your arbitrage profits. You instantly channel your liquid capital into automated corporate pipelines, family foundation vaults, and private offshore treasury networks that operate completely independent of your physical vessel, ensuring that your financial framework remains permanently insulated from external erosion for decades to come. This final integration requires the clinical execution of the infinite capital compounding loop and systemic asset immunization to maintain an unassailable position of wealth dominance across changing political and economic cycles. Your entire portfolio must be structured as a self-regulating vertical engine that feeds upon global friction. You do not rely on traditional retail investment advisory boards to dictate your asset allocation. You design a private, closed-loop financial system where the automated cash flows generated by your prime digital platforms, vertical supply chains, and hard physical utilities are instantly rerouted through optimized legal entities to purchase more distressed corporate debt notes and undervalued niche monopolies. You establish clear, non-negotiable risk mitigation thresholds. No single transaction or geographic jurisdiction is ever allowed to hold more than a calculated micro percentage of your global liquidity pool. By diversifying your capital across uncorrelated, high-moat asset classes that operate under distinct legal frameworks, you ensure that even if an entire national economy experiences total structural insolvency or an aggressive regime implements confiscatory fiscal policies, your overarching imperial network remains completely unaffected, continuing to compound its financial velocity in absolute safety and secrecy. Furthermore, we must restructure the mechanics of strategic succession and the multi-generational transmission of the predatory code. The ultimate vulnerability of an independent economic sovereign is not found within the volatile fluctuations of market charts or the aggressive interventions of fiscal authorities. It is found within the natural biological decline of their personal vessel and the potential intellectual dilution of their lineage. If you accumulate immense financial capital but fail to install your aggressive, analytical mindset into the psychology of your successors, your life's work will be completely liquidated and absorbed back into the institutional matrix by incompetent heirs within a single generation. The sovereign treats family succession with the exact same hyper-focused discipline used to build their initial corporate fortresses. You do not hand over raw wealth or unearned capital to your descendants, which only breeds submissive entitlement and operational blindness. You force them to enter the economic wilderness early, training their internal radar to spot systemic friction, manage biochemical stress under intense peer pressure, and execute complex transactions on their own merit. You embed your strategic principles into binding, private family trust charters that legally restrict access to the core family capital, ensuring that distributions are unlocked exclusively when your successors hit non-negotiable operational benchmarks of financial literacy, corporate leadership, and strategic execution, permanently preserving your financial empire across the generational horizon. Stand firmly at the absolute apex of your newly engineered financial architecture and observe the global economic landscape with the cool, calculating detachment of a master alchemist. Look back through the historical timelines of your consciousness and observe the old, unvetted version of your vessel, the porous, reactive entity that lived in constant financial anxiety, submissively chasing traditional career safety, and waiting for the collective matrix to reward its compliance, and realize that that entity has been permanently liquidated from reality. Their programming has been completely wiped from your internal servers, leaving zero residue over your current trajectory. You have stepped across the threshold into the inner sanctum of absolute material freedom as the undisputed legislator, judge, and executor of your financial destiny. Your frame is impenetrable, your assets are vertically integrated, your liquidity is offshore and insulated, and your personal velocity commands the exact frequency of every interaction you engage in. You no longer walk through the global marketplace begging for entry, looking for consensus, or asking permission to capture value. You are the primary cause, the unlit architect, the quiet financial predator who dictates the permanent gravity of the room. Carry this magnificent, unyielding frequency into every executive boardroom you command, every sovereign asset you acquire, every contract you seal, and every moment of profound, quiet solitude. Welcome the shifting macro cycles with a cold, knowing interior smile. You have successfully rewritten your internal code, fortified your international citadel, and constructed a self-sustaining empire of disciplined order and absolute financial sovereignty. The transformation is finished, the multi-generational legacy is permanently locked, and your absolute freedom is an unalterable law of global physics. Go forth and rule your capital with absolute power, absolute clarity, and absolute peace. The vault is now permanently sealed, and the throne is yours for eternity.